Today, many temporary bans on evictions expire this summer, setting up millions of renters for a massive crisis. Plus, the Supreme Court rules on two cases sharing one central issue: Trump's tax returns. And finally, enthusiasm for Tesla stock is spilling over into other electric vehicle names. We'll dig into the Elon Effect. I'm MacKenzie Sigalos, and this is CNBC After Hours. Let's take a look at how Wall Street finished the day. Stocks finished mixed, with the Dow and S&P 500 in the red, but the Nasdaq charging higher again, closing at a record high. Today's market action really illustrates a trend that's been happening for a while: big tech stocks outperforming the broader market. The Nasdaq Composite is an index that includes a lot of tech names. And as the Nasdaq hits new records, the S&P and Dow are still lower than they were at the start of 2020. And on a day when 9 out of 11 S&P sectors finished in the red, the big tech stocks hit new heights. Apple, Facebook, Amazon, and Microsoft all closed at record highs. And there's another stock that bucked the downward trend today. Tesla finished 2% higher. The stock seems truly unstoppable. It's up more than 230% so far this year. And it turns out the Tesla hype has a bit of a halo effect. CNBC's LeBeau can break it down.
Right now, investors are playing what I call the Elon Effect, essentially looking for pure plays when it comes to electric vehicles. Why? They want to replicate the success they've seen with Tesla. When you look at Tesla shares up 226% this year, a number of investors are saying, well, if it's worked for Tesla and it's worked for Elon Musk, can it work with other companies? And there are three stocks that in particular have had a nice move in the last couple of months. Nikola, which is a company that is going to be building hydrogen fuel cell semis as well as an electric pickup truck. There is also NIO, which is a Chinese-based company that makes electric vehicles, and sales are growing at a nice clip, albeit at a small base in China. And then finally, you've got Workhorse. Now, this is a company that builds electric work delivery vans. Think about the type of vans that might be used by a utility company. They are also a 10% investor in Lordstown Motors, which is building an electric pickup truck. All three of them are pure plays when it comes to electric vehicles. Investors are betting that the auto industry and transportation will quickly adopt electric vehicles, let's say over the next 10, 15 years. Now, it may take a while for that ramp up in sales to take place, but the belief amongst investors is Tesla is the best positioned company, but other companies that are pure plays when it comes to electric vehicles will also do very well. What about established automakers? Well, all of them are rolling out their own electric vehicles. You've got General Motors rolling out the first all-electric Caddy. That's going to be shown next month. As for Ford, you've got the Mustang Mach-E going on sale later this year, and you'll have all-electric pickup trucks from both GM and Ford coming out over the next 2 to 3 years. Almost everybody in the industry believes that Ford and GM could do well with electric vehicles. But because they are not pure plays right now, investors are looking at those stocks and they're saying, well, are you in the internal combustion business or are you in the future, which is electric vehicles? And if you're straddling both of those right now, investors are really not giving the established automakers any credit for developing electric vehicles.
Okay, let's get to our sound check. Here's a roundup of the day's biggest action.
And it's time corporate America paid their fair share of taxes. We thought in our administration we should lower the tax from the high 30s to 28%, then lower it to 21. I'm going to raise it back up to 28. Provide hundreds of billions of dollars to invest in the growth in this country. And the days of Amazon paying nothing in federal income tax will be over.
We do support another round of economic impact payments. In most cases, those are not checks, it's direct deposits. And we can get that into hardworking Americans' bank accounts very, very quickly. As soon as the Senate gets back, we're going to sit down on a bipartisan basis with the Republicans and the Democrats, and it will be our priority to make sure between the 20th and the end of the month that we pass the next legislation.
We continue to get Facebook, I think, pushing us on this idea that they are working so hard, that they are fixing these problems, that they are doing much better than the other social media platforms, only to sort of see the results not actually pan out in user experience.
Over 500,000 people downloaded the apps. We had over 200 million unique visits to our website. We had 10% of our customers shopping our website completely new to Bed Bath & Beyond. And then another 40% of our existing stores-based customers starting to use us as an omni-channel retailer. So as we're coming back from the COVID moment, we think we're coming back with real brand strength, ease and convenience strength, and assortment curation strength.
I think that TikTok, whether it spins out or not, the parent company is based in China. It's a Chinese company. I mean, if you remember a few years ago, the US government tried to get access to an iPhone. It was really difficult for them. They couldn't break in. Apple wouldn't give them the code, on and on and on. You don't have that in China. In China, if you have an app in China, you have to provide that to the government.
As the country struggles to contain the coronavirus, there's another crisis looming just over the horizon. Throughout the pandemic, many renters have been protected by temporary state laws suspending evictions. For people who may have been furloughed or laid off, they didn't have to worry that they'd be kicked out of their home if they couldn't make the rent. But a lot of those suspensions are expiring this month. More will run out later in the summer. And here's the thing. Like we said a few moments ago, the U.S. is still trying to tamp down on the virus outbreak. The national case count continues to rise higher, and not everyone who lost their jobs earlier in the spring has been asked to come back to work yet. In certain regions, some have gone off unemployment, gone back to work, and then been told that they have to leave again, as areas like Miami and Texas reverse some reopening steps and order bars and some restaurants to close down again. Millions of renters will be facing eviction by the end of the summer. But the situation looks different from state to state. CNBC's Diana Olick has the details on which states will be hit hardest.
It's really a perfect storm for the rental crisis. At the end of this month, various eviction moratoria expire, extended unemployment benefits go away, and after briefly reopening, some businesses are shuttering again due to rising COVID cases. That all means that by the end of September, up to 23 million, or 1 in 5 American renters, could be evicted from their homes. That's according to ongoing analysis from the Aspen Institute. States hardest hit include Arizona, California, Nevada, Indiana, Utah, and Wyoming. They have the highest share of renters at risk. But when you look at the actual number of renters, it's close to 4 million Californians, 1.5 million Floridians, more than 2 million Texans, and 1.5 million New Yorkers. Aspen Institute is factoring in renter household income, savings, and the cost of renting in various states. It also looks at state unemployment insurance and factors in real-time surveys on renter confidence from the U.S. Census. Those numbers just released showed that in the last week of June, 76% of renters had made their full June payments, but just 38% were highly confident that they could make their July payments. 43% were slightly or moderately confident they could pay, and 12% had no confidence at all. Renters in single-family homes appear to be doing better making their payments, but renters in multifamily apartments are having a harder time. And while legislation passed the House offering big renter relief and eviction bans, the Senate has yet to craft its own plan, and there is no timeline yet on when that could happen.
Time for today's numbers round. We'll kick it off with 7. In a 7-2 decision, the Supreme Court ruled today that President Trump cannot shield his financial records, including his tax returns, from the Manhattan District Attorney by claiming immunity. Those 7 justices in the majority, Ruth Bader Ginsburg, Sonia Sotomayor, Elena Kagan, Brett Kavanaugh, Neil Gorsuch, and Chief Justice John Roberts, also formed the majority in a separate case, also dealing with Trump's finances. That time rejecting efforts by congressional Democrats to have access to the president's tax statements. These mixed rulings are now subject to further review by lower courts, which means the public is not likely to see Trump's taxes or learn anything about his personal finances ahead of the November presidential election. Next, 8. Only about 8% of Quibi's initial free trial users have converted into paying customers, according to analytics firm Sensor Tower. The mobile streaming app launched on April 6th and offered 90-day free trials to anyone who signed up. But now that those trials are expiring, Sensor Tower estimates that only about 72,000 people have forked over money to continue their access to Quibi's content. Quibi costs $4.99 a month with ads or $7.99 a month without ads. And finally, 160,000. Tyler Blevins, better known as Ninja, played Fortnite on YouTube for about an hour and a half yesterday. At the stream's peak, more than 160,000 people tuned into the live stream. Ninja has become one of the most high-profile gamers after building a loyal following on the Amazon-owned platform Twitch. But Ninja is now a free agent of sorts. Last summer, he rocked the gaming world after ditching Twitch and moving over to Microsoft-owned Mixer, reportedly making $20 to $30 million in the process. But last month, Microsoft announced it would shut down the Mixer platform. Some fans thought yesterday's stream meant that Ninja had signed with YouTube, where he has 24 million subscribers. But it's not yet clear or confirmed that Ninja has a new permanent home on YouTube or anywhere else right now for that matter. That's it for After Hours, but before we go, here's one more thing to keep an eye on. Earnings season kicks off next week. It's those few weeks when most public companies report their financial performance from the just ended quarter. Now, it's always interesting to get a peek at the books, but this season is particularly important because we'll get a look at the first full quarter that was affected by the COVID pandemic and the shutdowns. Some of the names we'll hear from next week are JP Morgan, Wells Fargo, Bank of America, and Netflix. Stay up to date and get the latest news throughout earnings season by going to CNBC.com and downloading the CNBC app. We'll be right here in our home office every Tuesday and Thursday with a new edition of After Hours, so be sure to catch us then.